to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable where we talk about current market conditions, talk about what to expect going into the end of the year, what to expect going into the next year, key support and resistance levels, and latest trades, right? Review latest trades, review latest opportunities, latest signals, and answer any questions you might have. For those of you who are new, welcome. If this is your first event, do me a favor, type in first. I do see a few new names. Pierce, welcome. Carl, if this is your first event, I'm not sure, but welcome. My brief bio, right? I think the difference between Tradespoon and maybe some of the other services out there is that my background, I'm not an ex-market maker, right, or trader. My background is technology. So I built a lot of software and systems for traders, right? And that's how I learned trading. And then some of the companies actually went public, like Options Express, Media Ocean. I started as a first employee, building technology. So I have a lot of experience building teams, building technology, and now using latest advances in the AI. I built with my team signals using neural networks, latest advances in artificial intelligence to generate signals in the market. And then based on these signals in the market, I trade, and so does Keith, right? So that's kind of my background. Disclosures are very important. If this is your first time you see the disclosures, I encourage you to visit the link on your screen so you can understand the risk associated with trading stock and options. You can always pause the screen if you need more time to read the disclosures. But bottom line, I'm not here to manage your money, right? I cannot do this because I'm not registered with FINRA or SEC. But I can show you what I do in my own portfolio based on my own risk tolerance level, right, for education and learning process, right? So that's the main gist of the disclosures, which is very important. All right, so now that the important part is out of the way, let's talk about markets, right? Let's talk about markets. 10-year yield, right, continues to consolidate, elevated, right? That is a concern for the market, right? You can create a bull case and you can argue the bear case, but I think it's important to stay open-minded that both bulls and bears have a very strong case, right? And it's very hard to determine what the next move in the market is. Right now that NVIDIA earnings is behind us, most of the macroeconomic data is behind us, well, then what's next, right? What's the next catalyst? If it's not NVIDIA, and if it's not Pelletier, then what is the next catalyst for the market to go higher? Maybe it's Bitcoin, right, at all-time high, right? Maybe it's banks and industrials that are at all-time high. Maybe that's enough to generate the momentum. Most of the time, it's not, right? You need mega cap technology to push the market higher. And as long as NVIDIA and Meta and Microsoft are going to underperform, and Apple, market is going to have a hard time to continue going higher. So 10-year yield is probably one of the most important charts. I would also look at the dollar, right? Dollar is moving vertically higher. That is not good for the markets. We went from 100, close to 108. I mean, not close. We had a 108 print. And we broke through 107 level. That is the key level in the market. I would exercise caution, right? Like maybe it's time to raise cash. Maybe it's time to put a bearish hedge. But if this is a true breakout, right, multi-year, we have to go back to 22 when we had the recession to see dollar moving vertically higher. Usually when the dollar moves vertically higher, that means you have a problem, in some kind of a problem in the market, right? So this move is also an issue, and if it continues to grind to 108, 110, 112, market is we're gonna have a big pullback. So this is another chart that I would keep an eye on, right? It doesn't matter what NVIDIA earnings are. What matters are the currency markets and treasury markets. This is where trillions of dollars are sitting. So this is a chart that I'm keeping a look, and it's a head scratcher why that happens. Well, we know why it happens, but but if it happens and markets at all-time high and Bitcoin is all-time high, then I think it's a problem. The dollar and all-time high interest rates might also break out. High yield is still, it's consolidating, right? It's not still momentum to the upside. So high yield long-term looks fine. VIX slightly elevated, where we touched 13, and now we touched 18. So there's some signs of volatility picking up a little bit. Semiconductors continue to be weak despite NVIDIA home run, right? So semiconductors still at below 50-day moving average, still near 200-day moving average. I mean, there's only two things can happen, right? It breaks the 200-day moving average, right, and starts going lower and pulling the entire market along with it, or we're going to bounce back at least to 260 or 270, right? I mean, I don't know. I guess we need to wait for the next earnings season, because most of the, after NVIDIA, I'm not sure what the price action is, but we'll see next week. Small caps rally, that's good, right? Rebounding almost at all-time high, so that is bull case. Well, don't worry about Microsoft and NVIDIA. Small caps and mid caps, right? This is, all these stocks will push you higher, maybe, right? Mid caps are actually breaking out. And then regional banks, right? Regional banks, your big banks are continue to accelerate to the upside. Silver looks like it's finding footing. We have even oil is rebounding on geopolitical risks. We're above 50-day moving average again on, sorry, this is consumer staples. Sorry, consumer staples is rebounding. I stand corrected, but I think XOP is also rebounding. It is, right. So the oil is rebounding, the energy is rebounding, stocks, right? The consumer staples is rebounding. That is providing support for the market, despite, that NVIDIA is down. Germany and Europe is very weak, right? This looks like a recession, right? 72, 10% down, more than 10% down. And China is weak, right? China continues to deteriorate, making new lows, elevator up, elevator down. That is a sign of that's the bear argument, right? So you can argue the bullish side, you can argue the bearish side, trade what you see, not what you think. Bitcoin is at 100,000. You can think it's a very bullish sign, or you can argue that, maybe, this 50, 100% move in a couple months, maybe it's a little exaggerated. And NVIDIA still struggling with but it's struggling to make new all-time highs, but it's above the July high. So that's, I think that's good, right? As long as we're above 139 or maybe even 130, I think we're okay. If NVIDIA drops below 130, I think then the market is gonna have an issue. So I would keep an eye on all these charts. So what do the models say? Right? Models are not biased. They don't care about who won the elections. Short term, it sees that it's overbought, and potentially at 600, you want to consider trimming your positions, right? If we reach 600, I agree with the model. If we reach 580, 587, then maybe you should buy. I also agree. That's kind of for the next 10 days. If you're a short-term aggressive trader, those are your cues where the market will trade. You can also look at the 6 months. Predictions, still a strong uptrend, right? Basically saying that we could reach as high as 616 in the next few months. And this was done before the elections, right? Each data point is 1 month. We're looking at the long-term trends, right? If you look at how much data we're analyzing, like if you go into our research center and look at seasonality chart, this is since 1993, right? So what is it, 30 years? So 30 years worth of data, each data point is 1 month, 67% correlation, very high correlation right now, that basically November, December, the green line, usually if there's no negative news, right, you don't have any black swan events, usually the market goes higher. So basically on stock forecast toolbox, we can see that momentum is accelerating, right? For the long-term 6 months prediction, model predicted 583 to be high. We broke above that level after the elections, so it's providing extra momentum behind the bulls. But it needs to digest that momentum, so right now we're consolidating. So these are the short-term model, long-term model, seasonal chart. I always look at the exposure, gamma exposure, right? How people are positioned. Going into the end of the year, let's say, December 20. And still, one standard deviation, we can be at 610, 615. This is intraday, no, end of day. Let's see. Looks like volatility, yeah, volatility picked up, so maybe this is why. But still, the 610, 615 level, and then on the downside, 585, 575. So those are the levels you can expect if there's no big events between now and end of the year. 580, 585, maybe this is where you buy, and then 610, 615 is where maybe you sell. Okay. So now we know the positioning, right? Gamma exposure, the high open interest where bulls and bears meet the model. So then the question becomes, okay, right? We did this last week. A lot of you were here last week, right? We said, well, scenario number one, one standard deviation move, that's 610, right? 610, right? So that's scenario number one. We're going to touch 610. It doesn't matter where we're going to close, but at least between now and end of the year, we'll touch 610. Scenario number 2, no, we're not going to touch 610. We're not going to break new all-time highs. NVIDIA earnings did not impress most market participants. They were a little bit concerned about future projections. What is the next catalyst? Bitcoin is at 100,000, nice round number. So we're just consolidating, right? We're just going to need time to digest the new government, right? The new cabinet, and we're stuck in 2. 3, your bearish view, semiconductors are down, MicroStrategy, vertical move up, vertical move down, small caps semiconductors are underperforming, Google is falling apart, Microsoft underperforming, and inflationary pressure will start crippling, going back higher, or unemployment ticks up. I don't know, signs of recession, right? Some kind of signs of either hyperinflation coming back or recession. And then scenario number 3, right? We're going to dip below 50-day moving average and maybe revisit 565 by end of the year. All right, so talking about the end of the year, how many of you think we're going to get to 610? How many of you say, no, we're just going to trade between all-time high and 50-day moving average? And scenario 3, no, we're going to drop below 50-day moving average. Geopolitical problems, 2, will be worse. Okay, yeah, if you think geopolitical, escalation in Russia, Ukraine, if you think Middle East conflict will escalate, especially with the new government, not especially, I shouldn't say that. But potentially, right? Because there's new cabinet, that's uncertainty, right? But fair enough. If there's escalation in Middle East, 2, and then recession, 3. Peter, 3, 2. Renata, welcome back. I haven't seen you for a while. Carl, Don, Mark, Martin, Paris. Peter, Renata, TBCCRN. TBCCRN, what is your name? Because I keep saying you registered as TBCCRN, but I assume you have a name other than TBCCRN. I think this was your email. But if there's another name, just let me know. I'll try to remember. Okay. 2, 3, anybody else? I'm going to say 1. Nobody said 1. I'm going to say 1. I still think we're going to break 600, at least short term, break 600. I mean, we're already close to all-time high, right? We closed the gap. We're approaching all-time high. So I think because of the seasonality, window dressing, Christmas, New Year, usually there is a rally, unless there is just like Mark says, geopolitical issues or macroeconomic issues. Fine. But I cannot predict that, so I'm going to say passive least resistance is 1. And any pullbacks, I think, are buyable at this point. All right. So that's my projections. How do we help at Tradespoon? We have different services, right? I kind of touch base. We have models, right? Stock Forecast Toolbox, I think, is a great model to find what is the possible range that the stock could trade on the short term, 1 hour basis, 10-day, 6 months basis. You can put spiders, you can put Tesla, any positions, any stock, ETF you want, right? And it will tell you, it will might make the analysis, and it'll say, okay, Tesla is overbought, trend is down, or Tesla, or maybe long term it's in positive trend, or but it will give you the predictions, short term and long term. You also have a company screener. You can actually see which sectors are outperforming. We have banking, very strong momentum behind the banks, 65%, right? So this gives you like insurance, 52%, leisure, 43%. So you can see, the health services underperforming, food and beverages underperforming. But this is, metals and miners are doing fine, right? This is kind of where you want to look at sectors and what to expect. And you can put your portfolio, and it will keep track of predicted predictions, right, for open, close, low and high and stuff like that. So that's Tradespoon, right? That's the stock forecast toolbox. What I trade in a live trading room environment are the signals, so these picks, right? Based on the similar models, we analyze different time frames. The models analyze different time. It learns on the time frame and then makes inferences, right? Artificial intelligence, neural networks. I mean, this has been around for many years, but obviously in the past few years, it's accelerated in terms of how many models are out there and how much, research has been done in that area, which is exciting. So active trader, if you look at the active trader, for today it tells you, okay, buy OKE, right? Buy energy, some of the energy name, right? Buy Costco, right? And buy USB, right? Chuck, welcome back. So then it gives you analysis, right? It gives you basically, if you want to buy Costco, here's a suggested price. Wait till 940 or buy at the previous close, right? And then if it reaches, 965, then get out of the trade, right? So you can look at Costco, right? Today, there was a gap, right? So 962.55. Usually I wait for 15 minutes, right? But if you waited for 15 minutes, let's say 964, then you look for 1% move, and that would be $9, right? It would be 9% move would be 940. If you bought 955, 965. If you bought 965, you would get out in the 1% move and split the trade into two, right? If there is a gap, and let's say you never reach 955, 65, which in this case we did not, right? Then you have a choice, right? Usually I wait 15 minutes, find support, and then I would buy. Like here, I would buy at 964, right? And then I would be long. So if you're not sure, right, or you wait 15 minutes, you don't have like a trading plan, you're not exactly sure, then I would just rely on Elite Circle, right? In Elite Circle, in our live trading is where I actually trade these signals. But these are the signal suggested entry and exit prices. Again, we always encourage you to consider only 4 active positions with maximum loss of 2.5%, especially if you start trading and you're learning. Then only start with 4 positions, 2.5% maximum risk, right? It's not number of contracts or shares. It's not the dollar amount that you need to concern about. You need to be concerned about the risk per position. So look at the stop loss. You can look at the 50-day moving average, 200-day moving average. You can look at our predictive analytics. You can look at the gamma exposure, but you find some kind of a pain points, right? Some, not pain points, but somewhere where you could have these support resistance levels. And then based on them, this is how much exposure you're willing to take. So that's the active trader. Weekly trader is similar, right? Just analyzing different time frame, and the idea is to hold position longer. American Express, State Street, some of the regional banks, so same thing, right? You buy at 94.91 or 95.48, depends on what price. If it jumps to 97.39, then you're out, right? STT, let's look at STT, right? Weeklies get generated, on Monday, right? So Monday you come in, right? You wait 15 minutes, you don't have any regional banks, you buy 95.30, 95.70, it moved, 2%, you're out, right? 2% in 1 week, that, that's what the model suggests, right? and then monthly trader, right? It's all about position sizing, right? Very important to get the right number of positions and position size. That is 90% of the work. There's millions of signals, a Tradespoon, yellow tunnel, you turn on the Bloomberg, millions of signals. Figuring out which 4 to buy and figuring out, making sure you're not down more than 2.5%. That is a skill, and that takes a lot of time. It sounds trivial, but it takes years or at least months of repetitive trading and kind of building those skills, right? So I always encourage you, when you get into position, look at some kind of support resistance level, like STT, maybe 94, or maybe you look at what we suggested, 93, some of the stop losses, and that's your stop losses. And then either use our suggestions or just have your own, like maybe you can say 50-day moving average, right? Okay, 91.20. And at that point, whatever that stop level is, let's say it's 50-day moving average, or let's say you said, okay, 93, based on what the model said. Okay, great. Then, at that point, I want to be down less than 2.5% of my portfolio, right? If you break the trade into 2, then less than 1% of my portfolio. That is the most important thing. Questions? Chuck, NVIDIA, forecast, cash secure put. Love it. Well, I hope you did it last week because NVIDIA didn't go anywhere, so that cash secure put lost a lot of the value, right? If you look at the not the Valsky, but volatility chart. On NVIDIA. Right, going into the earnings, implied volatility was here, right, elevated, and now it dropped, right? So if you did any of these strikes, the volatility has significantly moved down after the earnings, right? You can see that implied volatility drops after the earnings, right? You always have a drop in implied volatility, and this is no different. So if you sell cash secure put with a 1 standard deviation and it did not move 1 standard deviation, then that was the right strategy. Right, that was the right strategy. So I assume Chuck did this last time, and now he wants to do it again. Okay. Nothing changes, right? You look at the gamma exposure, volatility has dropped. Let's go into January, right, or February, January. No, January is fine. Let's do expected move. So based on current supply and demand, very similar. Expect that the NVIDIA could be at 160 by end of January, right? If the bull market continues and NVIDIA finally breaks out, 1 standard deviation would be 160. On the downside, it's still that 130, 125 strike. So I would still consider, and there's not much positioning. And semiconductors are weak and NVIDIA is weak. So you should not be surprised if we get to 130, 125 by January. That's the strike I would select. Right, 130 to 125, you can go to, I don't like to do naked puts, so I'm going to do vertical spreads, show you kind of, you do only if you're a Chuck and you're managing, 6-figure portfolio or 7-figure portfolio, then you can do cash secure put. If you're managing average account is 10,000, then you probably don't want to do cash secure puts. Right, because the idea is the cash secured put, right? You have to have a cash. And if you don't have cash, then you probably don't want to do this trade. But put spread, okay, that requires less, right? So you can say, okay, I want a bullish put spread, right? I want to do bullish put spread on NVIDIA. I want to go into January, right? And I'm going to say that I want to sell 130 put. Okay, so 130 puts trades $4.25. So you sell 130 put, you can collect 3% in the next, was it 2 months? 2 months. So not bad, right? Not bad. But what if it drops below 130, right? So then, if you want to hedge, maybe 130, 110. I mean, you do have to spend $1, but at least you know that if the market reverses and market is overheated, and NVIDIA already kind of underperforming, then at least you have a hedge, right? Right. So just from that point of view and from the amount of risk, I would do 130, 110. If you have a large portfolio, if you have a smaller portfolio, I would do 130, 120. 130, 120, now you're spending half of your premium. I mean, 2% is still not bad, right? It's still not bad. 70% probability that it's not going to reach that level. And you have 4-to-1 ratio, right? For every dollar you're making, you're risking $3.50 if it drops below that level. So that would be my approach to, I mean, either cash secured put or credit put spread, right? You can see, if you're looking for a higher payout, right? If you're looking for a higher payout, that means that you have to take more risk, right? That's what it shows you, right? The maximum loss increases, right? If you want the payout to increase, right? You can have maximum profit go up, but risk to go down, right? That doesn't work. So this is a good representation of where risk versus reward. Chuck, any questions on NVIDIA? Carl, Chuck, Mark, Martin, Pierce, Peter, Renata, TBC, CRN. Any questions? Okay. It's 10 o'clock. Let's see what I did not cover. So, okay, so Elite Circle, right? You can basically, if you're not sure how to trade, you don't have a trading plan, you don't have a trading journal. Like a lot of people start buying Active Trader, right? They sign up for Active Trader and then they start asking questions like, well, what if it gaps up? What if it gaps down? What if it's within 10 cents? What if it's within 5 cents? When you ask these questions, these are all good questions, but that means you don't really have your own trading plan, right? These are just signals with suggested levels, but you don't really have a solid trading plan. Then I encourage you to consider Elite Circle, because this is where you get good, what I'm hoping is education, good education. And since you guys come back every week, I'm going to assume there is a reason why you come back. But you have exposure to morning bell and closing bell, right? You can watch the videos, you can participate live. You can enter your phone number, get a text message, and then every time I trade, right? Let's see today. You would see all of my trades, right? So Tesla, right? I filled it. I just got filled Tesla. Okay, great. So I just got filled at Tesla, right? I put a trade, right? Same thing. It came from Active Trader, right? Or I bought it at 344. I'm out at 349. Half of the position. $5 move. 1.5% in 1 day. Okay, great. Now I have the second trade, right? Second position. So this is an example that you can use to be in live trading and participate. I don't have any exposure to energy, so I bought SRE, right? I closed, and this is utility, this is energy. So I bought SRE because I want to have more exposure to the energy sector, to utilities. Right, and today I also trim Synchrony Financial, right? Because So you get exposure to the reasoning, and I'm doing both stock and option trades, right? What do we do? Close Oracle? No, United Airlines, right? United Airlines. So this week I closed United Airlines, right? Almost at maximum profit. So same thing, I try to do stocks, I try to do short-term, medium-term trades, and I try to do options, right? So you have exposure to, whether it's a call spread or a single call or cash secure put, these are all derivative strategies of underlying stock with a certain opinion of where you think the market is going. So then, you have exposure to both. You can ask questions, right? Because I trade these signals, Active Trader, weekly, monthly trader, and then you can participate in Elite Circle. I mean, you have other portfolios you can follow, like you can see only spread trades like United Airlines. In premium and spread, you would only see spread trades, right, or option trades. In Robo Investor, you would only be exposed to signals in, Robo Investor, what I trade in Robo Investor, stocks. It's only stock trades, right, only stock trades. We do have a lot of educational content. You can find it in here, market newsletter, recordings, and YouTube channels. All right. Any questions? Walmart, Renata, I don't think so. Walmart, I am off, probably by a day. Oh, no, I am. Oh, thank you for letting me know. Okay, Walmart is finally at 90. Okay. Let's see. Thank you for reminding me. What is Walmart trading? Finally, we're getting close. Oh, 90.44. Why didn't I get filled? Why did I not get filled? They had some issues, and then my order is disappeared. That's wonderful. Okay. Close. Let me see. 52, 95. Okay, so I can just trade. Oh, 90. So 90. Let me see, 90, 95. The problem is 95 doesn't have any bid. Well, 1 cent. Okay, fine. So close. Walmart will do 2 legs. So I'm selling to close 90 and I'm buying to close 95. Sell to close, buy to close. Buy to close 90. Let me think about it. Buy to close 90. Now sell to close 90, buy to close 95, and I wanted to get a credit of, well, it was at 44 cents. 50 cents. Well, I have till end of day, so I'm gonna manage this. Okay, so for now, let's put it at 50 cents. So sell to close 90, buy to close 95. It's easier to do it as spread at this time because 95 doesn't have a bid, 100 doesn't have a bid. So for that reason, I would, you don't need 90 or 100, right? So you can just sell, and you have to sell it as a spread, otherwise, you're gonna be naked, so you can't do it. So 90, 95 spread. I put it to trade at 50 cents. So I'm still losing trade, right? But looks like we're recovering some of the premium. And now you need to kind of manage it, right? We need to manage it because, again, time is ticking against me and looks like it's reaching the top. So probably makes sense to just get out of the trade. I'm just gonna get out. I don't have time to watch it. It's a good exercise. Okay, so I'm out of Walmart. And if you have time to watch it, it could continue going higher, right? Because it's kind of a big move to the upside. It's consolidating after the earnings. It reached that 90 level, right? We talked about that gamma exposure at 90 level, right? Walmart. But now the bad news about 90 is that it has high open interest and probably going to act as a magnet. It's going to have hard time escaping 90 level. Kind of already doing that. So maybe if it breaks out, then, but now you have to manage it carefully, right? If it drops below, the problem is time. There's a time decay. So if it goes to 90, then you're going to lose that 50 cents. But if it continues going higher, if you have more than one contract, I would maybe close one and leave the other one in case we break out. But Renata, thank you for letting me know. Bob, thank you from Bellingham. Okay, where's Bellingham? Bellingham, Washington, near the Canadian border, Washington State. Okay. Very nice picture. Good for you, Bob. My Walmart bullish prediction came true. You're right. Yeah. I followed your advice, did the call spread, and not a profit, I'm down, but it was a good prediction. What is your best subscription service to trade bull credit put spread? Bullish credit put spread, I would sign up for Lead Circle, right? Especially if you're doing bullish credit put spread and you want to participate in live trading room, I would do a Lead Circle. All right, ladies and gentlemen, thank you very much. Renata, thank you for, I lost track of Walmart for a little bit, but thank you for time and attendance, and I will see you guys. Keith will do the closing bell. I will see you Monday morning. Have a great weekend. Enjoy time with your friends and family, recharge, reconnect, and then Monday we're gonna do this again. Thank you.